Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video lecture. In the earlier sessions, we have discussed about different provisions related to the chapter of salaries. That is one of the biggest and important heads of incomes in the Income Tax Act, where we have studied about the retirement benefits, allowances and perquisites, and some other areas in relation to this head of income. Now let us solve some of the questions, numerical illustrations, to apply those provisions and rules in practical situations according to the information given in the question. But prior to watching this video, I would suggest all of you should have already written your own notes related to the key provisions in this head of income, and for general understanding how to write the summary notes is also already given in the ICAI's material as this recapitulation of the various provisions within this head of income. So all the aspects are there, the summary of them, definitely you have to go through that, remember that, and remembering is not going to happen automatically. For that purpose, you better put pen on paper and write these things down. That is must before solving the questions, which are comprehensive questions which will cover various aspects of this head of income. So you need to do this revision before solving the problems. In this basis of charge, section 15 was mentioned anyway, section 1013A related to HRA, then section 1014 related to the other allowances. So many allowances are there. Here in the summary only some of them are given, but need to remember some more allowances where the main provisions contain them. And the terminal benefits or retirement benefits include gratuity under two different circumstances, pension also, commuted and uncommuted, then leave salary. So section 1010, 1010A, 1010AA, 1010B and 1010C. These are all various retirement benefits. Section 10.5 is about leave travel concession, and provident fund related provisions have to be definitely remembered as well. And when it comes to the major aspect of perquisites, the valuation of rent-free accommodation is the most important rule in the valuation of perquisites, different situations. Similarly, interest-free loan or concessional loan, use of mobile assets, transfer of mobile assets, motor car perquisite, another very important calculation. Same way, what is the meaning of salary under different circumstances is also mentioned here in the summary of the chapter in the ICA material. And deductions, of course, section 16, 1A, 2 and 3 are already there. Relief part, you can leave it for now, that can be discussed separately. That has nothing to do with the computation of income from the head of salaries. So that is a separate discussion altogether. But care should be taken. You cannot take this recapitulation as it is because lot of things are not covered here. So what you should do, you take this only as a basis, how to summarize, what way we have to summarize. This many details are not required, only straight to the point, like this, that's all. This is how you have to summarize the provisions all at one place related to each and every aspect of this head of income, salaries. And then we can go on to solve the questions related to this chapter. So once again, I'm telling you, if you have not revised properly all the provisions already, stop this class right now and revise the provisions first. Then once again, try to follow this particular session. This is not some music video or a cinema where you can just watch and enjoy. So your understanding and your memory of provisions is what matters most. If you have already done the revision, that's good, fantastic. Let's go ahead with solving of the problems which we did not solve in the earlier sessions. Starting from illustration number 19. As usual, always you have to read the question very carefully. Unnecessary information, necessary information, we have to segregate very carefully. So read illustration number 19. Mr. X retired from the services of Y Limited on 31st January 2020. That means he was in the service during the previous year for a period of 10 months. 2 months was there after his retirement during our previous year. That we should identify. That is an important date of retirement. And he has completed 30 years and 1 month. Anyway, it doesn't matter, 1 month. We don't have to worry whether it matters or not also, because it is not exceeding 6 months. So 30 years is his number of years of service. And when he joined the company on 1/1/1990 at the age of 30 years, that is not required. If at all, to know his age currently, that might be useful. Otherwise, that is unnecessary information for us. But as of now, important information is he served the company for 10 months during the previous year, and after retirement there were 2 months in the previous year. And he has completed 30 years of service. That's it. And upon retirement he received the following items. One is gratuity, second one is leave encashment, and third one is not a retirement benefit, but as per the scheme of the company, he was offered a car which was purchased on 30th January 2017 by company for 5 lakhs, and the company has recovered 2 lakhs from him for the car, and the company depreciates the vehicle at the rate of 15% on SLM method, which is related to transfer of the movable asset. He was offered a car, means not that he has been provided a car, the car has been transferred to him upon retirement. So that is also one of the things that he has received on retirement only. Then he got 3 lakhs rupees as commutation of pension for the 2/3 of his pension commutation. That means out of his total pension he is supposed to receive, he received 2/3 of that commuted and received 3 lakhs rupees. Whereas the company presented him a gift voucher of 6,000 rupees on his retirement. No problem. Also his colleagues who worked with him all these years gifted him a television, LCD or LED, whatever it is, worth 50,000 from their own contribution. First point we have to identify, boss, that has nothing to do with salaries. In salaries, if the income is received by the SSE, that should be from employer the SSE has to receive. His colleagues gifted, neighbors gifted. That is not salaries for sure. Is it income or not? That is a separate discussion. But first point we should identify, he did not receive this gift from his employer. He received from his colleagues. So it is not falling under the purview of the head of salaries, that we should identify. How to treat that is a different story. We'll come to that. And for the following is the other information available. He has drawn a basic salary of 20,000 rupees per month and 50% of DA per month for a period between naturally April to January for a period of 10 months. And received pension of 5,000 rupees per month for the period February to March after commutation of the pension. So already after commuting, remaining amount is 5,000 rupees per month. How many months like that? February and March, only 2 months. So some portion is commuted and he already received some commuted pension, that is separate. This 5,000 rupees is uncommuted pension that he has received after commutation of pension. Question is, compute his gross total income, not the income from salaries, gross total income from the above for the assessment year 2020-21. That is the question, and we need to take the data that is given in the question one by one, and we have to do the calculations accordingly. So for at least one question or more, we will discuss about the presentation aspects of this question. This is how questions will be appearing in the examination also. As we already know, first of all, there should be a proper heading. What should be the heading? Statement showing computation of whatever is asked. What is asked? Gross total income of who? Mr. X for the assessment year 2020-21. Clearly there should be a heading for sure. Then the statement should definitely contain particulars and amounts or amount. So particulars and amount in rupees. So this is how the statement should look like, and one by one we have to keep on writing the information that is given. So first of all, retirement and all happens later, but he was in service for some time, so let us take that information first. Basic salary of 20,000 rupees per month, DA of 50% per month was drawn for a period of 10 months. So let us take one by one. Basic. In the exam you can show the calculation very clearly. 20,000 into 10, that comes to 2 lakhs. For small calculations you can show in the bracket, for bigger calculations you can show them in the working notes. So 20,000 into 10, that is basic. Then dearness allowance, in the exam you can write full form. That will be how much? 50%, means 10,000 into 10. That is half of basic, which comes to 1 lakh rupees. Then that is during the service. Then what happened? On 31st January he has retired. Once he has retired, he has received some pension. We can take that also. There is no sequence that is required, but every point has to be covered, that you have to make sure. So whether you are covering every point or not, you have to be definitely aware of. Basic is done, DA is done. Okay. Now let us take pension. Which pension this is? Uncommuted pension. So uncommuted pension, which is fully taxable always, 5,000 per month, like that. How many months? Only 2 months, February and March. That comes to 10,000 rupees. Then we can go to other items one by one in the same sequence what has been given. Say gratuity first. Okay, for that you better have a working notes separately below the answer. Working notes 1, that is gratuity. So gratuity received is how much? Gratuity received was 6 lakhs rupees. Okay, fine. Clearly you should write less. Exempt under which section? 10, 10. That is gratuity exemption. And you have to show the calculations one by one. What are the calculations? Once again, actual gratuity received 6 lakhs. Statutory amount, you have to write all these things. Statutory amount 20 lakhs. Not just amounts, you have to write the description. Actual gratuity received 6 lakhs. Statutory limit 20 lakhs. That was gratuity. And then the other calculation depends upon whether he is covered by payment of gratuity or not. Yes, he is covered by payment of gratuity act, which means the calculation will be 15 by 26 into last drawn salary into number of completed years of service or part thereof in excess of 6 months. But here there is no part thereof in excess of 6 months, so number of completed years of service is 30. Last drawn salary here is how much? What is salary here? First of all, basic plus any DA. Basic and DA was given, we don't know whether DA forms part of salary or not. Still it doesn't matter. Why? Because any DA will be anyway included here. So how much is the last drawn salary? 20,000 plus 50% of that means 10,000. Total is 30,000. Which means 15 by 26 into 30 into 30,000, which comes to 5 lakhs 19,231, let us say. So if 5 lakhs 19,231 is the gratuity exemption, because that is the lower of all the three, whichever is lower, then how much will be the taxable gratuity? 80,769. This you have to take it to the main answer. So gratuity in the bracket, working notes 1. How much is that? 80,769. That's it. That was about gratuity. Then about leave encashment. Leave encashment, how much he received? 3,30,000 rupees he has received for 330 days leave balance in his account. And he was credited 30 days leave for each completed year of service, which is in line with the Income Tax Act. So there is nothing else for us to separately calculate. Already he has been credited with 30 days only. After 30 years of service, let us say 30 into 30, 900 days he would have been granted. And 330 days is it the balance. That means 570 days he would have availed. But still it doesn't matter. Already whatever the number of days of leave is there at his credit, it is in line with the Income Tax Act only. So all that we need to do is, we need to calculate the exemption and find out how much is the leave salary taxable. So say working notes 2. So working notes 2, leave salary received. Received is how much? 3,30,000 rupees. Fine. Deduct. Exempt under section 1010AA. That you have to calculate. What are the things to be there taken there? Once again, you have to write these descriptions in the exam. Actual leave salary received, that is 3,30,000. Statutory amount was only 3 lakhs. Third one, 10 months average salary. What is salary here? Basic plus DA forming part of salary plus commission as a percentage of turnover achieved by the employee. But here we don't know whether DA is forming part of salary or not forming part of salary. In every question, if it is not given, it becomes always a dilemma whether to take it or not. You better take it as a policy. Let us say, assuming DA is forming part of salary, will solve all the questions. If it is not given, if it is given, there is no problem. But if it is not given, we have to take an assumption. So let us take DA is forming part of salary, which means how much will be the average salary here? Because there is no change in the salary. It's 30,000 rupees, which is 20 plus 10. That will be the average salary. Like that, 10 months average salary you have to take. So 10 months average salary is 30,000 into 10, which is again 3 lakhs. Then the last one, the number of days of leave at the credit of the employee subject to 30 days of leave for each completed year of service multiplied with average salary. So here how many number of days of leave he has at his credit? 330 days. That was days. But when we are talking about salary and all, here we are talking about months. That is 30,000 rupees salary, average salary per month. So we have to convert the days into months by taking just, let us say, 30. So 330 days means around 11 months into 30,000 means 3 lakhs 30,000. So all are very similar amounts, but ultimately which is lower here? Anything, both of them are lower. So which is the lowest one is exempt, which means 3 lakhs rupees is exempt, which means 30,000 rupees is taxable, right? So now let us take it to the main answer. Once again, leave salary. Working notes 2. 30,000 rupees is the taxable amount of leave salary. That's it. That is about leave salary. Now the next one. Next one says car. So car has been transferred by the company to the employee. So it is not a use of mobile asset, it is a transfer of mobile asset, that to a car. So we should know the provision first. How much will be the value of perquisite in case of transfer of a movable asset? So for that, let us do working notes number 3. Each of them requires a working notes. So first of all, what was the cost of the car originally purchased? Cost of the car originally purchased was 5 lakhs rupees. Fine. First you should remember the provision. What depreciation has to be applied for the car? That is 20% per annum using WDV method. So for each completed year of usage, 20% per annum under WDV method we have to apply the depreciation. He will tell 100 things. Company has depreciation rate of 15% and all this is useless. This is all completely unnecessary information. That is not what we want. We want what was the depreciation according to Income Tax Act. So originally when the car was purchased, on 30th of January 2017 it was purchased. So January 2017 it was purchased. 17 to 18 let us say. Depreciation 20% you can reduce, that is 1 lakh. Then written down value will be 4 lakhs. Okay. Then 18-19 also completed year. So 20% means 80,000. So 3 lakhs 20,000 is remaining. Then 19-20 did it complete? That you have to check very carefully. Yes, it completed because he retired on 31st January, whereas the car was purchased on 30th January. That means 1 year completed. 19-20 also fully completed. So 3 lakhs 20,000 into 20% means 64,000 is the depreciation for that particular year, which also should be provided since the year is completed. Then how much is remaining? 2 lakhs 56,000 is the depreciated value of the car according to the Income Tax Act. According to our provisions of valuation of perquisite in respect of transfer of mobile asset, that is the value. But how much the company has charged the employee? The employee was charged with 2 lakhs rupees. It was given in the point. So 2 lakhs rupees, if you reduce it, what is the value of perquisite? 56,000 rupees. That is the value of perquisite in respect of transfer of mobile asset. Once again, we have to take the same into main answer, that is transfer of motor car. Working notes 3. And how much we got there? Final answer 56,000. So you write it here, 56,000. Then next, an amount of 3 lakhs rupees as a commutation of pension for 2/3 of his pension commutation he is telling. So this is also working notes can be written, but directly also it can be calculated. So what is the calculation here? Because he has received gratuity, 1/3 of the commuted pension, had he commuted, whole of the pension will be exempt. So first of all, how much he would have got if he commuted whole of the pension? 3 lakhs into 3/2, because he commuted 2/3. If he received full commutation, 100% pension commuted, then he would have got 4,50,000. 1/3 of that is exempt, which means 1,50,000. That means commuted pension taxable will be 1,50,000. You can have a working note for that also in the exam. Like what? 1/3 of 3 lakhs into 3/2 is exempt. That is 1,50,000. 3 lakhs is received, 1,50,000 exempt means remaining 1,50,000 taxable. Then the company presented him a gift voucher worth 6,000 rupees, he says. Gift is taxable. If it exceeds 5,000, the entire amount is taxable. That is the interpretation we have taken, and entire 6,000, let us take it as taxable. These are the various items related to salaries. So first of all, how much will be the gross salary if you calculate? Gross salary will be how much? 2 lakhs plus 1 lakh plus 10,000 plus 80769 plus 30,000 plus 56,000 plus 1,50,000 plus 6,000. 632,769. 632,769. But from that, you have to give a standard deduction of 50,000 under section 16(1)(a). So what will be the final answer? The space was not supporting. I am taking it here. So final answer will be 582,769. 5,82,769 is the taxable salary. But the question was not that. Question was compute the gross total income of the SASI, it says. So what is there which is not in the purview of salaries here? That is LCD which is received from his colleagues, worth 50,000. Though we have not reached to the income from other sources, but we should already know, if not know it now. Any gift up to 50,000 rupees is not taxable if it is received from anybody. If it is received from relatives, whatever the amount may be, it is not taxable. But if it is received from non-relatives, any gift not exceeding 50,000 will be not taxable. So this is not exceeding 50,000. So nothing is taxable. So naturally, what will be the gross total income of the SSC also? That will also be the same. That is 5,82,769. And what was the assumption here for us? Dearness allowance was forming part of salary. If you take dearness allowance is not forming part of salary, then naturally the calculation here for the leave salary will be different. Instead of 30,000, you would have taken 20,000. Here also for average salary, instead of 30,000, you would have taken 20,000. So here whichever is lower will become 2 lakhs instead of 3 lakhs. That means the taxable leave salary will become 1,30,000 instead of 30,000 as we have calculated. So it depends upon the assumption. Here in this solution, it has been assumed that DA was not forming part of salary. But what we have assumed, DA was forming part of salary. That's it. So that assumption we have to write also in the working note. So this is how the problems under the head of salaries have to be approached. Of course, I am not talking about handwriting or the way it is here, but I am talking about the organized way of presentation, a proper heading, particulars amount, one by one, writing the description, and wherever required, showing the calculation in the bracket, wherever possible, showing the calculation in the working notes, and doing the calculations correctly in the working notes, bringing them to the main answer, and finally the actual answer should match with what has been the suggested answer. Of course, when there are any things to be assumed, definitely that will have different answer. That is quite natural. So why is that difference existing? That also we should know. When we are thorough with all the provisions, definitely we will understand. Depending upon the assumption that we take, the answers will differ also. So this question is perfect for 8 marks. Very perfect. 8 or 7 marks question can very well be expected like this. So this is typical examination questions, how they look under the head of salaries. Now let us take another question, that is illustration number 20. As usual, read it first carefully. Bala is employed in ABC Company Limited as finance manager and gives you the list of perquisites. So he is talking about only perquisites provided by the company to him for the entire financial year 1920. See, one by one we can just go through them and identify. So there is nothing special. Let us look at them because each of them will be separate anyway. Point number 1. Domestic servant was provided at the residence of Bala and salary of the domestic servant is 1,500 per month. Servant was engaged by him and salary is reimbursed by the company, that is employer, which means obligation of employee met by employer, which would be taxable in case of all employees. However, In case if the company has employed the domestic servant, what is the value of perquisite? That depends upon whether Bala is a specified employee or not. We don't know the other details, but once again, looking at the designation of Bala being a finance manager, we cannot assume that he is getting a salary of less than 1 lakh rupees per annum. That would be ridiculous. So if he is a specified employee, then the entire amount will be taxable. If he is not a specified employee, nothing would be taxable in respect of this. So since the first case says it is the obligation of employee met by employer, how much will be taxable? 18,000 rupees will be taxable. That is first point. Second, free education was provided to his 2 children, Aarti and Ashok, in a school maintained and owned by the company. The cost of such education for Aarti is computed at 900 rupees per month, which means it is not taxable since it did not exceed 1000 rupees per month. For Ashok, it is 1200 rupees per month. So here, no amount was recovered by the company for such education facility from Bala. The case of Aarti is very clear. Nothing is taxable because the value of perquisite towards her education is less than 1000 rupees per month. But the question comes about Ashok. There are again, as we discussed earlier, multiple views. Since the amount has crossed 1000, entire 1200 can be taken as taxable, or alternatively, only in excess of 1000 rupees is taxable, 200 is taxable, like that also it can be taken. So from the strict interpretation of what the words have said in the rule, let us take just like gift. Why to inconsistently take them? Gift also, educational facility also, let us take a stricter interpretation. Entire amount is taxable. That comes to 14,400 rupees. 14,400 rupees is taxable. Second point. Alternatively, we can say only 2,400 is taxable also, but that is quite possible according to the assumption. Interpretation actually. Both ways it is okay. Next. Third point. The employer has provided mobile assets like television, refrigerator, air conditioner, etc. Actual cost of such assets provided to the employee is 1,10,000. When he has provided mobile assets, we know that 10% of the actual cost will be treated as value of perquisite, which means in this case 11,000 rupees will be taxable. Same. Next point. Gift voucher worth 10,000 has been given on the occasion of his marriage anniversary, and this is given by company to all employees above certain grade. We don't care. Gift above 5,000 rupees, again we are taking a stricter interpretation, fully taxable, that is 10,000 rupees is taxable. Telephone provided at residence of Bala, bill aggregating to 25,000 rupees paid by employer, not taxable. Telephone, mobile, computer, laptop, not taxable. Next, last one, housing loan at the rate of 6% per annum is given by the company to Bala. Amount outstanding at the beginning of the year was 1/4/2019, 6 lakhs rupees, and Bala pays 12,000 rupees per month towards principal only, not interest, on the 5th of each month. So this involves a lot of calculation. Why? We need to find out the interest concession for each month, because the end of the month balances we have to take. For that we need a SBI rate of interest that is given at the end. The lending rate of SBI for housing loan may be taken as 10% he has given. He has to be given in the question. But company is charging him how much? Only 6%. So at the end of each month, how much is the outstanding amount on that 4% per annum, that is, will be taxable perquisite. So this calculation has to be done separately. You can do that. But monthly calculation we have to do. It is definitely a long calculation. For example, if you take April, how much will be the end of the month balance? Outstanding 5,88,000. Why? Because originally on 1/4/2019, 6 lakhs was the balance, and the balance of installment is due on 5th of each month. So on 5th April, he would have paid 12,000. So end of April, it would be 5,88,000. So what we have to calculate? 5,88,000 into 4%, that is per annum, that is the value of perquisite, into 1 by 12, because we are talking about only 1 month. So do this calculation. 5,88,000 into 4% divided by 12, that comes to 1960. Like that, next month another 12,000 will reduce end of the month. So 5,76,000, same, into 4% into 1 by 12, that will be 1920. If you observe, every month the interest will be reduced by 40 rupees. Why is that? Because 12,000 into 4% into 1 by 12 will be 40 rupees. That is the amount of reduction in the interest every month. So you add all of them. You don't need to do everything in the exam. At least 1 or 2 months if you do, and afterwards you can say so on, so on. So 1960, 1920, so on, reducing each month by 40 rupees. Total interest perquisite itself is how much? 20,880 rupees. Why? Already we have taken 4% only. That is the perquisite value, because 10% is SBI rate and a company is charging 6%. So 10 minus 6. 4% already is the value of perquisite. So what is the answer here finally for this point? 20,880 rupees is the value of perquisite in respect of interest-free loan. So that is the point here. What was the question? Compute the chargeable perquisite in the hands of Bala for the assessment year 2021. So one by one you can take. So one is 18,000, then you have 14,400, then you have 11,000, then you have 10,000, then you have already what we calculated, interest on the concessional loan, 20,880. Total comes to 74,280. That is the total value of perquisite taxable in the hands of Bala. That's it. That is only related to perquisites for practice. That was illustration number 20. Now, illustration number 21. It's only related to sweat equity shares. AB Company Limited allotted 1,000 sweat equity shares to Sri Chand in June 2019 somewhere. And the shares were allotted at the rate of 200 rupees per share as against the fair market value of 300 rupees per share. So, what is the perquisite value per share here? 100 rupees naturally. Difference between fair market value and actual allotment price. On the date of exercise of option by the LRT, that is Sri Chand. The fair market value was computed in accordance with the methods prescribed. Very good. So already we know what is the value, perquisite value, nothing here. 1,000 shares, each share 100 rupees. So 1,000 into 100. 100,000 means what? 1 lakh rupees. That's all. That is the answer for this question. 1 lakh rupees. In case of subsequent sale of those shares by Sri Chand, what would be the cost of acquisition of those sweat equity shares? Actually, that's a capital gains question. But logically speaking, let us say the same shares, if they are sold by Mr. Chand, let us say for 350 rupees per share, he received in June. Just for understanding purposes, let us say after 4 or 5 months or some time, let us say somewhere in November, example, he sold them for 350 rupees per share. That means how much he would have got? 1,000 shares, no? So 1,000 into 350, that is 3,50,000 rupees is the sale proceeds. But the question is not that. Question is, how much should be taken as cost of acquisition? What is the profit that he has derived from this sale of shares? Should we take 2 lakhs, which he actually paid, or should we take 3 lakhs, on which already he has paid tax? Because 3 lakhs minus 2 lakhs, whatever the 1 lakh difference was, already that was taxed in the hands of him under the head of salaries. So the question is that, what should be the cost of acquisition of those shares later on when it is subsequently sold? Sale price is a fact, 3,50,000. Question is what? In order to calculate capital gain, how much has to be considered as cost of acquisition? 2 lakhs or 3 lakhs is the question. 2 lakhs would be unfair, right? Because already this 1 lakh is taxed under the head of salaries. How many times we will tax the same thing again and again? So what is the correct answer then? 3 lakhs should be treated as cost of acquisition, because the difference between this 3 lakhs and original really what he paid 2 lakhs, that 1 lakh has already been taxed in the hands of SASI under the head of salaries. So what will be the capital gain in this case? If at all we calculate, that will be 50,000. Though it is not related to this chapter, logically we can easily understand that because the topic has come. Since the amount of 1 lakh is already taxed, it cannot be taxed once again. That is why instead of taking 2 lakhs as cost of acquisition, which is his real cost of acquisition, it is fair to consider 3 lakhs as cost of acquisition, because the difference between 3 lakhs and 2 lakhs, 1 lakh has already been taxed in the hands of the SASI under the head of salaries. That's it. So answer for first question is 1 lakh, answer for second question is 3 lakhs. So that was illustration number. First question answer is 1 lakh. Second question answer is 3 lakhs. That should be the cost of acquisition that they have to take. Illustration number 21 was that. Clear? Now illustration number 22. Once again, things about perquisites. Illustration 22. X Limited provided the following perquisites to the employee Mr. Y for the previous year 1920. One by one, let us see. Accommodation taken on lease by X Limited for 15,000 rupees per month. That is the rent paid by employer. 15,000 rupees per month. And 5,000 rupees per month is recovered from the salary of Mr. Y. So that is a separate story. Don't mix that. That what people will do. 15,000 minus 5,000, 10,000 they will take. Wrong answer will come. Don't mix these two things. Computation of value of perquisite is different. Recovery from employee is different. Recovery should happen after we compute the value of perquisite. While computing the value of perquisite, we should not think about recovery. That is the important point to be noted here. That is why this type of questions will be given to make you fall in trap. Second, furniture for which higher charges are paid by X Limited is 3,000 rupees per month. No amount is recovered from employee in respect of the same. Okay, no problem. Then the third one, car of 1200 cc means less than 1.6 liters, owned by X Limited and given to Mr. Y to be used for both official and personal purposes. All running and maintenance expenses are fully met by employer. Car is also owned by employer. Expenses are also fully met by employer, and also he is provided with a chauffeur. We have to find out the value of car perquisite. Gift voucher 10,000 will be taxable naturally. Compute the value of perquisite chargeable to tax for the assessment in 2021. Yes, assuming his salary for the perquisite will be 10 lakhs. This is the salary for the purpose of valuation of rent-free accommodation. Once we have that, we can directly find out the perquisite value one by one and then total them. So, what will be the perquisite value in respect of rent-free accommodation in case the accommodation is hired by the employer, which is the case here. Here the population and all will not matter. Directly 15% of salary, that is 15% of 10 lakh, which is 1,50,000. Compare it with actual rent or higher charges paid by employer, that is 1,80,000. That is 15,000 into 12, right? So 1,80,000, 1,50,000, whichever is lower has to be taken as value of perquisite. So first of all, the value of perquisite here will be 1,50,000. That is to be first calculated. If you deduct 5,000 from 15,000, it will be 1,20,000. Looks like that is lower. No, that would give to wrong answer. Now, after computing the value of perquisite, which we already did, by taking comparison of 15% of salary or actual rent paid by employer, whichever is lower, that was 1,50,000 lower. Now we have to reduce the amount that is recovered from employee. 5,000 per month means that comes to 60,000 rupees per annum, which is recovered from employee. That will give 90,000 rupees to be the value of rent-free unfurnished accommodation. Then add furniture, where the company itself is paying a higher charges of 3,000 rupees per month, which means 36,000 rupees per annum. Add them. So what is the total value of rent-free furnished accommodation? 1,26,000. So that is the first thing. If it is the main answer, let us take 1,26,000 as the perquisite value in respect of rent-free furnished accommodation. Then car directly you can find out. less than 1.6 liter, car owned by employer, expenses also met by employer, car used for both official and personal purposes, which means 1800 per month, plus chauffeur 900 per month into 12, 32,400 is the perquisite value in respect of car, right? That is 32,400. Next, gift voucher 10,000, anyway taxable because it exceeded 5,000. So 10,000 will be always anyway taxable. That's it. The total value of perquisites is how much? 126,000 plus 32,400 plus 10,000. That comes to 1,68,400. One lakh 68,400 is the total value of perquisites that is taxable in the hands of whoever that SASI is, Mr. Y. That was illustration number 22, only related to perquisites. Then illustration number 23. Goel receives the following emoluments during the previous year ending 31st March 2020. Basic, DA, commission, entertainment allowance, medical expenses reimbursed 25,000 rupees, professional taxes paid 2,000. In that 1,000 was paid by his employer, and Goel contributes 5,000 rupees towards recognized provident fund, and he has no other income. Determine the income from salary for the estimate year 2021 if Mr. Goel is a state government employee. Doesn't matter. Irrespective of that, we will have to calculate his taxable salary. So take one by one, all are given. So 40,000 into 12, so 4,80,000. Okay. $4,80,000 basic, that is. DA 15,000 into 12, that is 1,80,000 taxable. Then commission, point here is this said previous year, but he never said a per month or something like that. We are assuming unnecessarily that could be wrong. No. So let us take these things out. So this cannot be like this because he has not given, read that carefully, he has not given the per month thing. So we are thinking that basic is 40,000 per month, DA is 15,000 per month, but not necessarily. When it is given like this, you have to just use the data whatever is given. We don't care. So simply we take everything as usual, 40,000 per annum only. If nothing is given, everything is per annum. So 40 plus 15 plus 10 plus 4 plus 25 medical expenses also will be always taxable, plus 1,000 which was paid by his employer, that will be his salary basically. So 40 plus 15 plus 10 plus 4 plus 25. So 40,000, 15,000, 10,000, 4,000, 25,000 plus 1,000. 95,000 was his salary basically. But he contributes 5,000 rupees towards the recognized provident fund. He contributes, he said. Nothing was told about employer's contribution. That was not mentioned. So this is not relevant for us. What he is asking is income from salaries. So 95,000 is the total of all of these items. 95,000. Then main point is standard deduction definitely of 50,000 has to be given under 16(1)(a). Then entertainment allowance deduction has to be given also because he is a government employee. State government employee is also government employee. Entertainment allowance, what was the provision for deduction under section 16(2)? Actual entertainment allowance received 4,000, or 5,000 rupees standard amount, that is the statutory limit, or 1/5 of basic. So how much is 1/5 of basic here? 8,000. Whichever is lower. Lower is 4,000 only. 4,000, 5,000, 8,000. So lower is 4,000. So how much will be the entertainment allowance that can be given as deduction here is 4,000. If you do this in the main problem itself, considering it as exemption, that would be wrong. Again, you have to keep in mind there is a distinction between exemption and deduction. Exemption is given to the income when the income is earned. Deduction is given later. First it is included in the income calculation, then the deduction is given later. So deduction here for entertainment allowance will be 4,000 rupees. Then profession tax paid, 1,000 was paid by employer, already you included that. This is all already included in the earlier calculation of salary. But deduction here will be available for his payment also, employer's payment also. So 2,000 rupees can be claimed as deduction under section 16(3). So finally, what will be his taxable salary? 95,000 minus 56,000, let us say 39,000 is income from salary for this person, if this is the data that is given. Ideally, basic DA and all you should have given per month. So we don't care, whatever is given we have to just calculate. So 39,000 should be the final answer. That is the final answer. So when nothing is mentioned about per month, you cannot assume that it is per month. You have to take as it is given. How can a state government employee get that much low salary? All these questions we don't need to worry. That is none of our business. Whatever question gives, our job is to compute what is asked in the question, not to question the question. So that is not going to help us. So that is about computation of total salary of various salaried employees, and RPF, that is recognized provident fund, as we discussed. That was his contribution. So how can that be income? That is his own saving. So it will not be taxable. But is it eligible for ATC? Yes, it is. But are we calculating total income? No, we are only calculating gross, not even gross total income. Income from salaries only we are calculating. One head of income we are calculating. That's what is asked. If he asks total income, then yes, from this 39,000, definitely this 5,000 rupees can be given as deduction if total income was asked. Then his total income would have been 34,000 if it was asked, but it was not asked. Income from salaries only was asked. And it was mentioned he doesn't have any other income also. So if it was asked about compute his total income, then the answer would have been 34,000, because this 5,000 saving is eligible for section ATC deduction after computation of gross total income. That's it. That is about some of the questions related to computation of salaries. As I said, relief is a separate discussion that has nothing to do with other provisions of income from salaries. That is more of a clerical calculation which we can learn later separately also. Small discussion is enough for it. But computation of salary is our main target. That is what we have done in many illustrations. And there are some exercises also which you can practice. Question number 1, I think already you would have done. In one of the tasks I already gave it. So hopefully you understood the way this has been solved. First of all, you should split the entire year into different time periods and depending upon the facts, because HRA exemption is based upon many facts. What is salary? What is the rent paid? What is the actual HRA received? And which city the employee is residing in. All these things will be relevant. Accordingly, the calculations have to be done. So question number 1 is something which already you should have done in one of the tasks. Question number 2, do that now. Just I will explain overall how this has to be just approached. Ms. Raki is an employee in a private company and she receives the following medical benefits from the company during the previous year 1920. So question is medical benefits related question. Reimbursement of following medical expenses incurred by Raki on treatment of her self-employed daughter in a private clinic. So any private clinic treatment is fully taxable. So definitely 4,000 will be taxable. On treatment of herself by family doctor, whoever the doctor may be, taxable. On treatment of her mother-in-law, dependent on her in a nursing home, wherever it is taxable. And anyway, mother-in-law is not part of the family, so even if mother-in-law is treated in a government hospital also, it would have been taxable. But here, anyway, she was treated in a separate nursing home, doesn't matter, that is taxable. Payment of premium on Mediclaim policy taken on her health, no. Mediclaim policy, that is health insurance premium or medical insurance premium paid by employer on behalf of the employee towards the health of the employee is not taxable, that is an exempt perquisite. Then medical allowance is fully taxable, that comes to 24,000 rupees because it was 2,000 rupees per month. Then medical expenses reimbursed on her son's treatment in a government hospital. Government hospital treatments definitely not taxable. 5,000 not taxable. Now, expenses incurred by the company on the treatment of her minor son abroad. Treatment expenses 1,05,000. Expenses in relation to the foreign travel and stay of Rakhi and her son abroad for medical treatment is 1,20,000. Limit prescribed by RBI for this is 2 lakhs. Here definitely there is a little bit of misinformation. Why? Because limit prescribed by RBI for this means which? Is it only for the 6th point or is it for 5 and 6 points put together? There is no clarity on that. But assuming that this 1,05,000 and 1,20,000 put together only, this 2 lakhs limit is prescribed. As far as this treatment is concerned, there is no problem because it is within the limits prescribed by RBI. Whereas for travel, point is the other incomes of Rakhi other than this should not exceed 2 lakhs. The income under the head of salaries should not exceed 2 lakhs. But that information is also not there. So we have to write both cases. So the question is not about computation. So question is about examine. So you have to explain each of them. The taxability of above benefits in the hands of Rakhi. So one by one, point by point, you have to examine means explain. So 4,000, 8,000, 5,000 taxable, that will treat. So that will be 4,000 taxable perquisite. Second, 5,000, 8,000 also is a taxable perquisite. Then 5,000 also is a taxable perquisite. That is all clear. All three are taxable. Entire amount is taxable. That is 17,000 you can say put together. Then medical insurance premium is exempt. It is not taxable. That's what you should write. Medical allowance 24,000 per month is fully taxable. That's what you should write. And reimbursement of expenses related to government hospital, no, not taxable. That is an exempt perquisite. So for each of them you should write that. So here, when it comes to the other things like treatment outside, there you have to write all the theory. Like expenditure on the medical treatment outside India, 1,05,000 rupees. And then 1,20,000 rupees is a travel expenditure and stay expenditure. So what is the condition there? All conditions are there. One, the RBI limit it should not exceed. Second condition is the gross total income of the SASI should not exceed 2 lakhs. We don't know that there is no clarity in the question. So it is all about grey question. Assuming that the limit of 2 lakhs prescribed pertains to both expenditure and medical treatment as well as travel and stay abroad, then the total perquisite can be excluded only subject to a maximum of 2 lakhs. In case the expenditure is less than 2 lakhs, it will be fully excluded. But here, the travel expenditure of Rakhi and her minor son would be excluded only if the gross total income of Rakhi is not exceeding 2 lakhs. So all if only. So if the gross total income of Rakhi does not exceed 2 lakhs, then it will be exempt. It will not be taxable. Which one? This 1,20,000 rupees. Otherwise, let us say her gross total income exceeds 2 lakhs, which is more possible. Then how much will be taxable? Total amount of expenditure is 2,25,000 here, right? And RBI prescribed a limit of only 2 lakhs. Then 25,000 will be taxable if her gross total income is not exceeding 2 lakhs. If it is exceeding 2 lakhs, this entire 1,20,000 will become taxable. Like that, if this case, what is the treatment? If another case, what is the treatment? Theory question, you have to write all those details, right? That is question number 2. Then question number 3. Yeah, these type of questions are exactly what you can expect in the exam for smaller questions, 4 or 5 marks like that. So X is employed with AB Limited, monthly salary 25,000 per month, entertainment allowance and a commission of 1,000 per month each. So people don't read this word and they will calculate wrongly, and then they say, "Arey, I am not getting marks." Each means entertainment allowance 1,000, commission 1,000. The company provides him the following benefits. Company owned accommodation is provided to him in Delhi. Furniture costing 2,40,000 was also provided on 1/8/2019. So only for how many months you have to add the value of furniture? It was 10% per annum. But now we should add only for August, September, October, November, December, January, February, March. Means only 8 months you have to add. So 2,40,000 into 10% into 8/12 only will be the value of furniture, that is 16,000. And you have to value the rent-free accommodation according to the rule 3. That has to be done separately. And a personal loan of 5 lakhs is granted, on which the company charges 6.75% interest. Entire loan is still outstanding. Means there is no payment. That is a point here to be noted. When there is payment every month, monthly you have to calculate. When there is no payment, no problem. Directly 5 lakhs into, and what is the SBI rate of interest? 12.75. So 12.75 minus 6.75 is 6%. So calculation can be directly done like this. 5 lakhs into 6% into, that was per annum. How many months here? 9 months only. 9/12. So interest per requisite will be 22,500. Like that. Next. Third one says his son is allowed to use a motorcycle belonging to the company. The company had purchased this motorcycle for 60,000 rupees on 1/5/2016. Motorcycle was finally sold to him on 1/8/2019 for 30,000. So understand these type of points very carefully. There is a two-way perquisites. One is use, one is transfer. Both are happening here. Use of mobile asset. Motorcycle is also a mobile asset. How much will be that? 10% per annum on the cost of the asset. So 60,000 into 10% into how many months it was used? April, May, June, July. 4 months into 4/12. That comes to 2,000. That is for use. Transfer again you have to calculate separately. It is motorcycle, not motor car. So understand that also carefully. Where motorcycle falls in other category. 10% straight line method. So 1/5/2016 to 17, 17 to 18, 18 to 19. 3 completed years of usage. 10% per annum straight line method means 6,000 per annum. 3 years means 18,000. So 60,000 minus 18,000. Depreciated value will be 42,000. Sold for 30,000 means 12,000 is the taxable value of perquisite. So 2,000 for use, 12,000 for transfer. Then professional tax paid by Mr. X is 2,000. You have to read it. It is not paid by company, so it should not be included first. If it is paid by company, then it has to be included first, then deducted. If it is paid by SC only, nothing to be included in the salary. Directly, just have to give deduction under section 16(3) later. So that's all. That is the question. So basic salary will calculate normally. Commission you will calculate normally. There is this entertainment allowance included here first, definitely. Deduction will be there or not, you have to check later, not now. Even later also it will not be available because it is AB Limited, not government. So no deduction later also for entertainment allowance. Even then, we should not even think about it now. We should just simply include it first. Then rent-free accommodation calculation is the key. What is salary for this purpose you have to take, and take according to the situation, because the accommodation is provided where? Delhi. Means definitely a population of more than 25 lakhs, which means 15% of salary you have to take. But what is salary? You have to calculate. Then adding the value of furniture to that, we get value of rent-free furnished accommodation. Interest on personal loan, already what we calculated, same thing, 22,500. Use of motorcycle, 2,000. Transfer of motorcycle, 12,000. Adding all of them, gross salary. From that, deduct 16.1a and 16.3. You get the taxable salary. Do this one. Solution is there, but don't look at solution. Do this one and then check with the solution. That is the best way of practicing the questions, all these things. Okay. Then, question number 4. Balaji, employed as production manager in Beta Limited, furnishes you the following information for the year ended 31st March 2020. Naturally, basic salary is given up to 31st October something. From November onwards, it is something else. So, how many months? April, May, June, July, August, September, October. April, May, June, July, August, September, October. 7 months something. And then November, December, January, February, March. Naturally, 5 months something else. So 7 into 50,000, 5 into 60,000, like that. Salary is due and paid on the last day of every month is normal. That is just given to confuse unnecessarily. So what? Nothing. Salary is normally due and paid on the last day of every month only, even if it is not mentioned. So when it is paid anyway, it doesn't matter. It is assumed always that the salary is due at the end of each month. Then it is given that DA is 40% of basic. You can calculate that. It is not given whether it is forming part of salary or not. So it is your choice. You can take it as forming part of salary and then calculate. Then bonus equal to 1 month salary. So 1 month salary is again a tricky point. Why? Which month? Are we talking about 50,000 monthly salary or 60,000 monthly salary? For that, we have to look at the date when it was given. Paid in October 2019. So definitely which month salary will be given? October month salary will be given. Means 50,000 rupees basic plus 40% of basic, that is 20,000. Total 70,000 bonus would have been paid to the SASI. Then contribution of employer to the recognized provident fund account is 16% of basic salary only. Once again, if you assumed DA as a forming part of salary, your calculation has to be done separately, because contribution of employer is 16% of basic. But what is exempted is 12% of not basic, 12% of basic and DA forming part of salary. So it depends upon whether you assume DA forming part of salary or not. If you assume like that, calculation will be different. If you assume DA is not forming part of salary, it is easier also. Then directly you can take 12% of basic as exemption, which means 4% of basic will be taxable in this case. Then professional tax paid is 2,500, of which 2,000 was paid by employer. So 2,000 will be included first. How much will be deducted later? 2,500 will be deducted later. So when we say includable in the salary, this is 2,000. How much should be deducted later under section 16.3? 2,500. That's it. Next, facility of laptop and computer provided for both official and personal use. All these things are nonsense. Laptop, computer, not taxable. That's all. And the cost of laptop 45,000, computer 35,000, acquired by the company on 1/12/2019. So what? So what? All that doesn't matter. If it is transferred, then we think about it. Nothing was mentioned like that. So don't sit for unnecessary data. That is a nonsensical, useless point. But you will get 1 mark for that if you write nil and write a note for it. Don't think useless point means it will not get marks. It will get marks. But provided you should write a note for it. Then, motor car owned by employer, cubic capacity exceeds 1.6 liters, more than that, provided from 1/11/2019. Always you have to look at dates carefully. So November, December, January, February, March, only 5 months it is provided, both for official and personal use. Okay, car is owned by employer, used for both official and personal. Running expenses also were fully met by employer. This is unnecessary. 45,000. Why do we need it? We don't need it. We don't need this. Why? Because already it is both official and personal purposes. Actual running and maintenance expenses, who cares? If the car is exceeding 1.6 liters, it will be automatically 2,400 per month. That's it. Because car is owned by employer also, expenses are also met by employer. 2,400 into how many months? November, December, January, February, March, 5. That will be the taxable amount directly for the value of perquisite. That comes to 12,000 rupees. That's it. That is the taxable value of car perquisite. Motor car was self-driven, very good. No chauffeur and all, nothing to be added. Then, leave travel concession is given to employee, his wife and 3 children. Okay? 3 children. 3 children means you have to be careful. One daughter aged 7, twin sons aged 3. That is okay. That was okay, right? We discussed already. If daughter aged 3, twin sons aged 7, then problem. Then only 2 will be getting, 1 will not be allowed. So here daughter is aged 7, bigger one, elder one. After that twin sons were there, aged 3. That is considered to be 1 only. So cost of air tickets is 30,000 for adults, 45,000 for 3 children. Balaji is eligible for availing exemption this year to the extent it is permissible in law. Entire thing is permissible in law. There is no problem. So nothing to be taxable, but you have to write section 10(5) provisions to get marks. That's all. Everything is there. All that you need to do is add one by one. What are the taxable items? Basic, then DA, then bonus, employer's contribution to the recognized provident fund in excess of 12% of salary, assuming DA is not forming part of salary. That assumption is important. Then professional tax paid by employer has to be added. Perquisite in respect of motor car already we calculated 12,000. Add everything. Then give deductions. Standard deduction 50. Professional tax deduction is 25, not 2, because employee also paid 500. After all this, finally the taxable salary is 9,67,500 rupees. And very important once again, DA does not form part of salary is the assumption that you have to write. Blindly you just do something and throw it on the examiner or expect marks. It will not happen like that. You have to clearly write the assumption whether you are assuming DA to be forming part of salary or not. But still, in the main exam, my general observation has been that in order to avoid too many assumptions by different people in different ways, they have been giving all the details in the exam, don't worry. So mostly there will not be a requirement of assumption, mostly. If required, don't hesitate to do that, but write it clearly in the working notes. That is the important point. Clear? Then question number 5. It's also a similar one. First you have to find out the basic salary according to graded pay scale that you know already. Then he is paid 10% DA, 10% of whatever basic salary you calculated, that only will come. And bonus equivalent to 1 month pay based on the salary of March. Earlier bonus was paid in October. Don't say every problem should be same, not necessary. This company pays bonus in March, what we can do? So you have to take March month salary as bonus, 1 month salary, or 1 month or 1.5 months, 1 month. So 1 month pay is given as bonus. He contributes 15% of his pay and DA. So here also DA is forming or not forming, not given clearly. You can assume forming in this case. Convenient. Earlier problem you can assume it is not forming because it was convenient. Directly you can take 4% of basic. Here because it is mentioned that is contributing 15% of basic and DA, take DA as forming part. Then easily you can say 3% of basic and DA will be taxable towards the employer's contribution because company is also contributing the same amount. After that rent-free accommodation has to be calculated, but you cannot do it now. You have to push it. After doing all other things only, you have to calculate rent-free accommodation. Don't try to calculate rent-free accommodation in the beginning itself. Though it is given in the beginning, leave it blank. After doing others, then come back and complete the rent-free accommodation working notes. That is a better way always. So it was a rented accommodation taken by the company at 10,000 per month, which means this provision is rent paid by the company or 15% of salary, whichever is lower. So where is it provided, which city, population, doesn't matter. Then facility of laptop, facility is not a facility, so not taxable. Company reimbursed medical treatment of brother, fully taxable medical treatment. The monthly salary of housekeeper is reimbursed by the company, fully taxable, that means 12,000. Gift voucher of 10,000, 10,000 is fully taxable, 10,000. Conveyance allowance of 1,000 per month is given by the company towards actual reimbursement. Means, assuming conveyance allowance is seen in the list of allowances which are used for official purposes generally, but no details. But from the name, we can say, assuming the conveyance allowance is actually spent for official purposes because it was reimbursed by the company towards actual spending, nothing will be taxable. Like that, you have to write a notes. Then personal accident policy, we know that it is not taxable. Telephone allowance, careful, not telephone facility. People see telephone and say, no, not taxable, not taxable. No, sir, it will be taxable. And why rent-free accommodation has to be calculated at the end? Because this will also be included in the salary for the purpose of computation of rent-free accommodation. So you have to take basic plus DA, forming part of salary, because we are assuming it is forming part of salary, plus bonus you have to take for the purpose of salary of rent-free accommodation, plus telephone allowance also you have to take. Remaining are perquisites, so they cannot be taken. And contribution to the recognized provident fund also should not be taken for the purpose of salary while computing the value of rent-free accommodation. So like this, each of them you have to include basic, DA, bonus, assuming DA is forming part of salary, telephone allowance fully taxable. Rent-free accommodation calculation is the key here. Do this one carefully. This is the key. And medical reimbursement is taxable, salary of housekeeper is taxable, gift voucher is taxable. After all of them, give the standard deduction of 50,000. Then you get finally what is the income chargeable to tax and that of salaries. And proper notes have to be written always. And that is what is mentioned here also. That will give the best possible marks in the examination. Fine. With that, let us conclude this chapter of salaries. Practice the questions well, but before practicing the questions, always focus on the provisions. Income tax is not about problem solving. No, it is not costing, it is not accounts. This is income tax. This is more about provisions. More thorough you are with the provisions, any type of problem you can solve. Just because of solving certain number of problems, you cannot be getting better marks in this subject, because those problems, if they don't cover one provision, and in the exams some other provision will be asked which is not covered already by these problems, then you will not get marks there. So don't give top priority to the problems, give top priority to the provisions, 70%, 30% priority to problems solving, numbers, calculations and all. But those who sometimes unintentionally but foolishly fail or get lesser marks in this paper are those who think they want to always solve some problems. Calculator frenzy people will not be rewarded in this paper. Let me tell you, this is about more and more provisions, more and more theory, and more memory of each and every small item. What all items are there? So many minute details are there also in some of the provisions. Those things have to be remembered, and it is not easy. I know that. Remembering all of them is not easy, but we have to do that. There is no option, right? That is why we are here. So that is why we have to come out with a solution for such a challenge. That is writing. Preparing own notes for the provisions. Keep key points only, not the entire reproduction of what is there in the essay material, but key points to be noted down, and they have to be revised a number of times. Whenever some half an hour is available, 20 minutes is available, revise the provisions, just like that. If we do this, definitely we'll become very comfortable in solving many questions in the taxation paper. Once again, solving the problems is not the focal point. Yes, it is important. We have to also solve, because ultimately in the exam what we have to do is solving problems only. But while learning, it is not the only way of learning. While learning, it is more about provisions, remembering them, interpreting them, reading them, writing them, then finally applying them into a problem. The last step. Just by doing last step, we are doing great job. We should not think. That's what I meant to say. So read these things well, and then revise them well. Practice the problems also number of times, so that you understand how application of the provisions happens into real life situations. Each situation here is possibly a real life situation only. That's what we call a problem. And once again, let me just reiterate the fact, this is the biggest chapter in the heads of incomes, and definitely the most complex one also. So don't worry, going forward this will become easier, not tougher. already the toughest nut we have cracked. So our teeth are already enough empowered to just crush any other small nuts. The other chapters will be relatively easier compared to salaries. That is the good news for you, and you can continue the preparation and revision of these provisions and practice of problems for this chapter. And in the next sessions of income tax, we'll discuss any other topic, any other head of income separately. Till then, take care. Bye bye. Thank you very much.